Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your weekly technical analysis of the New York and London coffee markets. I'll start with New York coffee. The bearish-looking bow tie formation has been the second biggest strategic event of this market in recent times. This is the bow tie created in early July of the short moving average, currently at 214.55, the medium moving average, currently 220.40, and the long moving average, currently 226.90, that I suspect triggered the big move down in mid-July. Prices closed below both the 50% Fibonacci line of the August 21 to February 22 move at 217.45, and one of the lower trend lines, currently 222.80, of the largest pattern, or at least I thought it might be one of the lower trend lines of the November 21 to July 22 lopsided diamond pattern. Now, I thought this trend line, which was the April 21 to date uptrend back then, might be the lower uptrend trend line of this lopsided diamond pattern. However, if you look at the reassigned uptrend, currently at 200.45, well, that also might look like a lower uptrend of this big diamond pattern. Additionally, all of it, might just look like a bear channel as well. Boy, this is not easy, that's for sure. Anyway, back to the bow tie formation. It is not a perfect bow tie, but the moving averages were in the right order and it's still there. Now, in bow tie formations, there are two expectations. The first is that between 15 to 20 sessions after the crossover, we should have seen a move in the direction of the bow tie. That would have been between the 29th of July and the 5th of August. Secondly, the market would move in the direction of the second bow, that is the one after the crossover. Hence, a bearish crossover of moving averages and a bearish move. Well, after all that, we did have a combined key reversal down and bearish engulfing pattern on the 1st of August. A good looking one as well. However, that petered out 2 days later with a combined bullish engulfing pattern and bullish opening white Mariposa. And despite some backing and filling, prices have overall moved higher and thus rendered the bearish bow tie formation a failure. There have been some interesting moves though. We've established a new uptrend line currently at 209.20 and the proposed lower trend line of the possible diamond pattern, the previously mentioned one, currently at 222.80, well, it has acted as an upper channel line, really, until today. Today, prices have moved up through the neckline of the April to May reverse head and shoulders pattern, currently 225.20, and we're testing the key long moving average, and I've punched through it as I've been writing this, 226.95 that is. Indeed, prices are now testing the February to date downtrend, currently at 228.25. That makes up the upper trend line of the diamond pattern. Thus, it's all getting very, very interesting as the major bearish pressure has been alleviated, and it will now be interesting to see how the market handles the long moving average and the downtrend. There's plenty of ammunition below that's been gathered since July for a further attack higher should the market choose to do so. London coffee. As I kept saying here each week for months now, mainly because it still resonates to this day, is that the key difference seen in London coffee compared to the New York contract is how the peak of the market was back in late December 2021 rather than when New York had it, which was in early February 22. This difference has been crucial to the formation of a number of patterns here in the London contract at a much earlier stage and in some cases not duplicated in the New York contract. We've had a November 2021 to February 2022 head and shoulders top. The neckline, currently at 2089, has been super important as it resonated as a resistance trend line of sorts until recently. At the same time, further down, the market has been, until July, unable to penetrate the support area underneath that stretched from the 2004 level all the way down to the 1935 area. However, it was in July that the market tried lower and was reasonably successful. I say reasonably because the dip achieved its primary target of action between March and June being a sideways rectangle pattern. However, one could also look at the action since March being more like a shallow descending wedge pattern. But for what was achieved, a rectangle will do. Yet that being said, one could look at the dip in July also as a false break for the shallow descending wedge pattern. Interestingly, the move back up was limited by our old friend, the 2004 level, the top of the previously mentioned congestion area that became resistance this time. This went on until 3 weeks ago, strictly actually 4 weeks ago, but the main move up happened 3 weeks ago, up to the medium moving average, currently 2060 even. Then 2 weeks ago, prices moved higher still, breaking through the neckline, the top of the descending wedge, and the top of the rectangle, which for ease of reference, I will suggest use the flatlining long moving average, currently 2150. The move up last week apparently ran out of steam just ahead of the 2017 high at 2279. This has given us all sorts of possibilities. For starters, if we regard the July dip as a false break, then we could look at the primary target for the rectangle on the top side at 2265, which has already been reached, and a secondary harder to reach target X1 in the 2295 area, which isn't that far away. We could also apply the same parameters to the action being a false break lower of a shallow descending wedge pattern, in which case the primary target would be 2240 area, again already reached, and the secondary target the same as the target X1. That's up in the 2295 area. Finally, the mid-August action looks important. However, I cannot divine whether it is a topping action or a continuation action as yet. I will defer my ideas on that other than to look at it as a possible weekly topping action or a possible bull hammer halfway hesitation type action. As I said earlier, there are all sorts of interesting possibilities now developing. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.